Hello, everybody, from Cornerstone's headquarters in downtown Scottsdale. This is another episode of Cornerstone's Plugged In. Let me tell you a little bit about our guest here. Now, at Cornerstone, around these halls and across the country, we have 140 smart team members who cover every area of banking, M&A, and technology and lending. But my guest here always says to us, it's all about payments, right?
That's right. It's all about payments.
This is our guest, Managing Director Brandi Gregory from Cornerstone Advisors. Welcome.
Thank you. I'm excited to be here from beautiful Ohio.
You know, we love to have guests outside the firm, but this topic is so important. We had to get you on Plugged In right now because there's a lot to talk about with banks and credit unions about payments, and especially as we're looking into next year for planning, for budgeting, for what do we have to work on competitively. So thank you so much.
Yeah, I'm excited to be here. Thanks.
You're everywhere, right? You go to all kinds of conferences. You're talking to the Visas, the MasterCards, the Fiservs all day long. What are you hearing out there? Just overall, what's the chatter?
Uncertainty. Right? I think the number one thing is uncertainty, but everyone keeps saying, oh, when we get on the other side of the pandemic.
Right.
We are on the other side of the pandemic because I'm here, which means I got to travel and leave my house and I'm here. So what do we need to do? But there's been a lot of headlines in the last 2 weeks, right? I mean, it's the end of October. There's been a lot of headlines in October around payments.
Let's dig into some of those. And at Cornerstone, we love rock and roll music. And so we're going to have a little themes here. So I'm going to give you a song quote, and it's going to tip off what I want to talk about. Brandi, first one, the best things in life are free, but you can save it for the birds and bees. I want money. Now, you've been across the industry in the past few weeks talking about Reg II, and we understand this affects our bankers and our credit unions' money. What's going on with Reg II?
Yeah. So, I mean, even as we're talking about the news, right? So Visa came out this week and actually said Visa will have no impact to income from this change, which is a head scratcher. But if we dial back 10 years and we think about the impact Visa experienced from Durbin 1.0, they lost about 68% of their volume on day one, and they got it back, let's just hypothetically say day two. So from Visa's perspective, they're going to get this figured out before their fiscal ends. So their fiscal year started October 1st of this year. This impact theoretically goes into effect July 1st, and their fiscal doesn't end until the next September, right? So whatever happens July 1st, they're going to get figured out, and they're not probably worried about what their financials look like. So, but Tony DeSantis and I have been talking about this, Steve, and I don't have the magic globe, right? Everyone keeps asking me, Brandi, what do I budget for this? Everyone's situation is different. It's going to depend on what networks you're with. But we're happy to talk to people about that because so right now we've coined it SAD math. We're happy to help you figure out your SAD math. Yeah. And that's the math that you want to kind of have in the back of your mind. For some issuers, it's 9%. For some issuers, it could be 30%. It just depends on what your spend mix is, how your cardholders act, what other products you have surrounding it. I was talking to an issuer today, Steve. They still do debit rewards. Right. And they showed me their SAD math, and I said, and July 1st, you'll be ending your debit rewards because you can't afford it anymore.
So in a nutshell, for execs who don't spend all day long in payments, Reg II really is about card not present transactions, me on Amazon buying heavy metal T-shirts. It's about the fact that a second network will be there, and that tends to compress price when you can route through not one but two networks. Is that how you would tell it to an exec who doesn't live in payments all day long?
Yes, but also increase fraud.
Okay.
So that's the second hat trick to this is that I'm going to take away your income because I'm going to route it cheaper, and then I'm going to take away all your chargeback rights because theoretically it's safer.
Gotcha.
And the word theoretical is intentional because it's not safer.
Right. As I recall you in your articles and your webinar and your town hall is I don't put a pin in online for card not present, even though that's how it routes. So I'm getting the reduced margin, but I'm not getting the protection.
Correct.
Okay. So what are bankers and credit unions? They're doing their SAD math. What's the reaction going to be when you have SAD math and you say, I got to replace this money that I talked about? What are replacement strategies going to look like in the next few years?
Yeah. So we just started to dig into this a little bit. We had an article, Glenn put an article out today in Gonzo Banker, and it's, credit unions, I think, are doing this better potentially than banks. Bank of America has done it, but it's the relationship rewards. You're going to need to look across your entire ecosystem of how you reward your customer to get the loyalty, because you could have 5% loss of income from this kind of gradual, and then over time, it potentially is going to ramp up. So it's not like, oh, I fix it, I plugged the hole today, I'm good for tomorrow. The hole's just going to keep getting bigger, right? So your hole may start pinhole, and then it's going to keep growing. So you have to have a secondary way to offset that gradual loss. And I think that's going to be loyalty and relationship, right? Now, again, I just said you're going to get rid of debit rewards, which you are. You need to find other ways to reward people across your ecosystem, right? Is it auto loans? Is it lending? Whatever it is, make them want to give you all of their business so that you can start to replace that income.
So you can't just manage loyalty at the product level, it's the relationship level. And I think another point there, Brandi, is deposits have not been the bastion of competition. Rates have been low. No one's been competing on rate. Now we're going to need deposit funding in the years ahead. So it used to be like, I don't care about balances. Let's just have the transactions. I think you're going to see some of those rewards also look at balances and other engagement.
Well, and I mean, have they recovered yet from overdraft loss? Right. So I think it's if you figured out how to tackle loss of overdraft income, then maybe you already have the right strategies in place to absorb this. But I haven't met anyone that's overcome the overdraft loss yet.
Right. Exactly. So I remember back in the 80s, a great movie. I loved The Breakfast Club. So my song lyric here, Brandi, is "Don't you forget about me. I'll be alone. Dancing, you know it, baby." Tony DeSanctis, your colleague in Cornerstone's payments group, has shared a lot of data showing that payments wallets are growing. So first it was card not present. Let me put in my card number, or let me just auto save that data. Now it's, I'm going to use Apple Pay. I'm going to use Shop. I'm going to use PayPal. And the numbers I've seen that you guys are sharing is that's pretty substantial, say 3 years out. So it's kind of cliche for, someone like me who's not as deep as you to say, so stay top of wallet. Right. Bring that down to earth. What can I do to stay top of wallet? How do I make sure my bank credit card is right there in Shop or Amazon or PayPal?
Right. So, this is one of the main reasons why I don't love when people just want to randomly flip their card brands. Because in today's environment, it is harder to it's easier to put a plastic in a wallet than it is to put your plastic across your digital ecosystem. So I got to put it in Starbucks, Netflix, right? I need to put it everywhere, or I just put it in Apple Pay and use Apple Pay to pay for everything. Right. But you have then you're like, am I doing all of the right things? There's no good way to confirm that you are working with your cardholders to get it to the right place, because the vendors still are not reporting how well penetrated your cards are into those different tokenized ecosystems. So, one of the things I was talking to somebody, they're like, Brandi, we have no idea. We see token transactions, but we have no idea which wallet, where it's coming from. We just know it was tokenized. So the processors need to do a better job of preparing and arming institutions, issuers with data so that they can figure this out. But you have to reward people. So I know we're saying, so many folks are reducing their branch footprint and going digital. You have to have the outbound contacts. You have to have the call campaigns. You have to be communicating in whatever way you communicate. Everybody does it different. SMS push, whatever the communicate, do a TikTok, right? Do a TikTok and be like, put your card in your wallet, right? Maybe you'll get the youngsters to listen to that.
If you'd like to hire Brandi, operators are standing by for the TikTok actress.
But yeah, I think that's what they're going to have to do. Now, on this same vein, this week, you know how you can buy an Amazon now? Venmo.
Right.
Here you go. Where are the regulators now? Venmo just comes along and makes it a closed loop transaction, completely eliminating the card networks, which is super interesting because of the PayPal involvement there, and then PayPal's relationship with some of the brands. It's all...
Yeah, everybody's quietly trying to build their own closed loop of the future in many respects. So, but one takeaway, call to action there, as much as you can, work with your processors, work internally, get as much data as you can about payments behavior.
You have to understand your data.
Yeah.
If you get nothing else, that's what Tony and I have been saying. If you get nothing else from the last month, please understand what your data is. And if you can't get it from your processor, ask someone for help because they have it. You just may not know how to consume it.
Right. So speaking about like where do we go with this pressure, song from the 70s, Bana, bam, bana, taking care of business. We talk a lot about payments in terms of consumer. I understand obviously that small business is covered by Durbin, but when we look at our clients, they don't have the interchange revenue in small business at near what they have in consumer, but a lot of community regional banks are commercial business focused. Is there upside, do you think, out there in banking land for small business payments growth?
Yes, because people historically just put small business under regular consumer. Mm-hmm. They're both impacted by Durbin. So if you're over 10 billion, sure, it's impactful from an interchange perspective, but you can get for those that are under 10 billion, you need to get your small business out of your consumer because it's a better interchange rate. Mm-hmm. Even though the new Reg II also applies to that, it's still a better interchange rate. And those average tickets on small business online shopping, huge. Right. So if you took those average tickets on to a small business interchange rate, that would be a game changer for these institutions. So again, understanding what your portfolio is and where your spend is. You may not even realize people over the years have opened small business accounts into consumer because it was sole proprietors.
Okay, so you've got revenue, you've got higher interchange sitting there because of how it's categorized, and you're probably not engaging them like a small business should be engaged with maybe more services on treasury and other things. I also think what's interesting right now is if you can get that payments activity, we also want those core deposits now because we just saw the greatest short-term rate increase in the Fed's history over a 6-month period. So now I need deposits and I also need interchange. So I think one of the calls to actions, get serious about small business payment products and that whole relationship right now.
Well, and figuring out where to start. Like we're throwing so many things at these issuers saying, do here, go here, go here, look squirrel, right? Mm-hmm. So figuring out who can help you figure, where to look. How do I do this? Mm-hmm. I've seen both of the brands. So regardless of your brand partner, I've seen both of the brands put together just killer small business campaigns to help you tear that out of your portfolio, right? Help you find those customers within your portfolio, target them, grow it, get those deposits, and it's a lower lift for the institution. Like we can't forget that you're paying in 23 to 30 basis points of value to these brands for your business. Make them work for it, right? Put them to work for you because they have some really good tools. Yeah.
And I think we probably see that happening, but for executives out there, you might not be leveraging that relationship enough. So that relationship may be 2 levels down and we're just not pushing the envelope. So, for budget time, a good gut check on, are we really getting the marketing value over the branding agreements that we get? And they're getting more data oriented and segment oriented and persona oriented. So,
I sat in a meeting and listened to a brand present to a client who was going to tip to 10 billion next year. And they looked at the brand and said, what are you going to do to help us? Right. We're going to have this huge impact. What are you going to do? And we spent 2 hours talking about commercial. Right. So that they're ready and excited to talk about it and they want to help, but they're not salespeople, if that makes sense. Yeah. So they're not kind of shoving their story down your throat. Right. They're waiting for you to come to them. I don't know if that's the right answer, but just know that there's a story to be had there. Right. So maximize your relationship.
No downside for asking.
Right, exactly.
So, hey, this year my wife took me to Vegas to see Lionel Richie. So I'm going to quote this one. Stuck on you, been a fool too long. Guess it's time for me to come on home. And what I mean by stuck on you is processing in the payments world has really consolidated. There was a First Data and a Fiserv, and now that's one company. There was a WorldPay and an FIS, and under FIS there was everything from Metavanti to e-com and stuff. So we're down to a big FIS, Fiserv duopoly. What does that mean? Can our banks and credit unions, regional banks, can they still transform, or is that going to slow them down, basically having Coke and Pepsi on the processing side?
They need to go out and find the seltzer water. because there is a seltzer
What's
water.
the seltzer water?
The company that's not them. That's not those two, right? So I've been in the business 25-ish years now, and when I started 15 plus processors, there's a lot of new processor entrants. That's going to be scary for banks, right? I'm not going to go and give all my business to the fintech card processor, because they're potentially just there to get bought, right? So banks traditionally like stability, and that's what Fiserv and FIS have offered. I think that there's other alternatives out there now that offer that stability where you can be more transformative. Both of those companies are seeing sweeping changes in their organizations in the last couple of months that really is impacting service. Just know there are other alternatives where you can go and find service. You don't have to be hamstrung by that. 10 years ago, we didn't have APIs. We didn't have open data streams. You had to be in one place. All of that's changed, right? So to me, you can't blame your card processor or your core provider for holding you back anymore. You got to kind of get the mirror, look in it, and kind of blame yourself if you're stuck in one spot and not evolving past that, because you have options.
Cool. That's well, and it's kind of which risk do you want to take? I might stay with the large scale proven, and do I have slow risk, obsolescence risk, but am I willing to accept the risk of working with some of these new players, which you're going to have some at least know-how how to manage integrations, or at least how to manage vendors doing integrations.
Right. Well, and we talk about, what did COVID force? Digital. Right. So if your core you feel like your core is hamstringing you, but your digital isn't, focus on digital, right? Get that digital account opening solid, work on that cardholder self-service. Don't feel held back. There's so many different niche things you can do to advance yourself. Yeah.
I think that's kind of a good closing thing, is that the collision of mobile banking, digital self-service, and payments is huge right now. And when we find that there's still a lot to finish on that roadmap.
It changes daily.
Yeah.
Right? Yeah. I mean, so you can't be steady or you're going to be gone.
Yeah, and I think for next year, we're going to be fighting more for deposits and payments revenue that, don't starve the digital roadmap, even though, hey, we've got, margin to worry about and expenses, and will we have loan losses. Keep plugging away on the digital transformation, right?
And invest in that today, because over time, that's going to be a cheaper expense.
Yeah.
Right? Than opening a branch and serving in a branch. It's going to be a shorter term, higher expense, but over time, it's going to be a lesser expense.